All right, we're at 1 o'clock Central Time. Welcome, everyone. This is John Friedland, AVP of Business Development here at AGWS. Welcome to our AGWS University 2020 webinar series. Today we have Reggie James for part 2. He's the Vice President of Sales at Advanced Dealership Management Solutions. And we also have Bob Harkins, our Vice President of Training here at AGWS. Today, both the guys are going to be covering F&I job description, 5 areas of responsibility. They're going to touch on compliance and ethics, sales, management, administration, and wrap it up with financial. I just want to draw your attention to our webinar series. All of these are available via our website. You can get to these links and watch and listen to any historic presentations done here from our F&I Insights program or webinar series. So we can access these again via the agws.com website. So with that, I'll hand it over to both Reggie and Bob.
Thank you very much, John Friedland. Good morning or good afternoon, everyone, and welcome back to F&I Insights October group, October session. Our objective, as always, is to work with our agent partners and dealer clients to help them maximize deal profit and the front-end gross and deal profit, but as always, to do it the right way, and that is in a manner consistent with good customer relations and sound business practices. I want to get started on these areas of responsibility, part 2 of what we really began last month with the F&I profit recipe. Top left-hand corner there, we have industry update, and I want to share some things with you that are hot off the press. The first one is really not compliance and ethics, but it has to do with the business that we've all chosen as a career, the retail automobile industry. Then the second one certainly has to do directly with C&E, compliance and ethics. First of all, industry update relating to the business that we've chosen as a career. Perhaps you've seen these numbers, but last Wednesday, the 7th, October 7th, NADA issued their analysis of third quarter 2020 auto sales. And what a comeback we have that's underway. And this is too intensive to get into much detail on this, but just want to point out a couple of things to you. Most of you that have been in the business for any length of time know that 2015 through 2019 were great years relating to the retail automobile industry. And for those 5 years, 15, 16, 17, 18, and 19, were all 17 plus million new car and light truck years, with 2016 being the best year ever mark at 17.5 million new cars and light trucks. Going into 2020, the NADA forecast for this year, 2020, certainly well before COVID, they came in at 16.8 million new cars and light trucks. So that was the NADA forecast going into 2020. I might tell you, though, the past couple of years, probably 3 straight, NADA also said that we would be less than 17 million new cars and light trucks. And in all those years, we came in at 17 or 17.1. So we were hoping that that would be the same for this year in 2020. However, obviously something happened, and that was the onset of the pandemic. So NADA came in at 16.8 million new cars and light trucks. At the onset of the pandemic, NADA reduced its initial 2020 light vehicle sales forecast of 16.8 million all the way down to 13 million new cars and light trucks. From 16.8 down to 13 million, so that would be a 24% decrease in new cars and light trucks. That was the NADA initial forecast. But ladies and gentlemen, as you know, we're roaring back, better than many people expected. And given the better than expected recovery, what NADA has now done is adjusted their forecast for 2020. And what they just said last week, the new adjustment for new cars and light trucks is 14.1 million. 14.1 million new cars and light trucks. And of course, if that comes out to be, that would be 17 million or 17% off the 2019 number. But again, going into the year, the first three quarters, we've been down 19%. So what a great news that is. The third quarter report from NADA, their 2020 auto sales analysis. And then the second update, industry update relating to compliance and ethics. In many of our segments for the past year, and actually dating back to January of 19, when we started our our F&I Insights webinar series, we've been quoting a lot of things from the law book, Car Law from Hudson Cook, the F&I Legal Desk Book. And then, as you know, one of the other publications that Hudson Cook delivers and offers to us is their Spot Delivery newsletter. The Spot Delivery newsletter. And what this is a monthly legal update for auto dealers and finance companies. So the September 2020 Spot Delivery newsletter, probably the greatest news we've seen in a long time related to ECOA, discrimination, lawsuits, and what they have to say about how we can protect ourselves in the dealership as it relates to baseless ECOA pricing discrimination claims. So if you have that, I would encourage you to pull it out. If you don't, get it down the road. But on page 10 of Spot Delivery, Hudson Cook attorney Jean Noonan actually wrote this article. Jean Noonan is again a Hudson Cook attorney. She co-authored 4 of the chapters in the 8th edition of Car Law. So if you read through Car Law, you'll see a lot of things in there from Hudson Cook attorney Jean Noonan. However, the title of this article says, American Bar Association, at last, a good auto sales and finance resolution, exclamation point. Think about that. American Bar Association, ABA, at last, a good auto sales and finance resolution. I will tell you just a couple of hot button points on this, that this resolution passed by the ABA. The vote was 336 to 16, unheard of, 336 to 16. And the long and the short of it is basically this. A dealership can now have safe harbor protection against price and discrimination claims, and that's for dealers that faithfully implement the NADA Fair Credit Compliance Policy and Program, and then also the NADA Model Dealership Policy for Voluntary Protection Products. So the bottom line, what this says is that dealerships would be safe from claims of pricing discrimination, and that fact should give comfort not only to dealers and dealership groups, but also to customers and the finance sources as well. Jean Noonan's comment at the end says it would give the dealerships that adopts the Fair Credit Compliance Policy Program deserve protection from baseless ECOA pricing discrimination claims. That would be a big win for all of us. So now what's happening in the world of lobbyists, they will be going out, the lobbyists for ABA, hitting Congress, hitting the states, and also even tribal governments to present this resolution that can become some of the things that they will pass from a law standpoint in their various states. So something very, very positive from the American Bar Association. Safe harbor protection from baseless ECOA pricing discrimination claims if we have employed and faithfully implement the NADA Fair Credit Compliance Policy and Program. So wanted to mention that up front. So that's 2 areas of great news, I think, as far as how our industry is coming back, and also finally some great news with respect to the NADA programs and how that can help us and possibly have safe harbor protection for ourselves, our dealerships, and protection for our customers as well. With that, I want to turn to Reggie. Reggie, thank you again for joining us for this session. This is part 2 of our 2-part series on the F&I profit recipe and areas of responsibility. We exhausted that profit recipe last month. We'll probably add a couple things to that today, but primarily we want to stay on these 5 areas of C&E and then into sales, management, administration, financial. So Reggie, let me turn to you, and I think you're going to chat a little bit about the 7 deadly sins of F&I and the things that you're doing with those in the stores that you represent. So Reggie, go ahead, sir.
Good afternoon to everyone, and thank you to Bob Harkins and John Friedland of AGWS for having me today. So yeah, wanted to touch on a few of these areas today and under compliance and ethics. I would like to start with the 7 deadly sins of F&I, and in conjunction with that, I'm going to kind of tie that with selling with integrity for new business managers. Would like to talk about some of the things that you need to absolutely stay away from, and for veteran business managers, hopefully you are staying away from these things and are selling with integrity and doing things the right way. So starting with the 7 deadly sins of F&I, we'll be acknowledging Mr. Dave Robertson with the AFIP group and talk about some of the things with regards to these practices. We're going to start with using the word best when quoting the APR. We would advise and tell you not to ever use the word best when talking about finance charges or APR when talking to a customer when working on trying to get their loans approved. Let me be clear that we have a buy rate and we have a sell rate. Buy rate simply means this is what the bank is offering the paper to the dealership or has approved the customer at that particular interest rate. For instance, let's just say that number is 4.9 and you have the ability to mark that up reasonably. And let's just say that the bank says they can let you mark it up 2 points. So that 4.9, you have the ability to actually mark it up to 6.9. So the best rate in those two scenarios, this is rhetorical, is it 4.9 or is it 6.9? The actual best rate is 4.9, but you're selling it to the customer over that particular buy rate number, which means that you didn't give it to them, did not give it to them, give them the best rate. Excuse me, I'm getting tongue tied here for some reason. So we want to make sure that we're being very careful when using the term best. And using the term best, that needs to go throughout the dealership. That needs to be with your sales associates, sales managers, business managers. We need to be very careful when quoting and using the term best with consumers. If you're asked the question, hey, is this the best rate that you can get me? We want to stay away from the response by using the word best. If they're asking that question, this is the best rate that's available, or this is the rate that's available. You can mention that this is the competitive rate in this market. There are a number of things that you can say other than the word best. We want to stay away from that because using the word best can maybe potentially get us in trouble down the line with that. Bob, do you have any follow-up on that?
Well, that's some great information, and Dave Robertson would certainly add to that and talk about cases he's been involved in as an expert witness where that word best has just been very, very negative. So we talk about it when I do my role play, and we all might do it a little bit differently, whatever is, our commitment is to do business the right way. As a result of that, we don't use terms like best rate, or for that matter, even worst rate. We just find that they're too vague and subject to interpretation. So Mr. Customer, if you wish to finance here, whatever that rate was, 7.9%, this is the rate that's available. If you wish to finance here, this is the rate that's available. Yes, sir.
Right. So the next one we want to talk about is an absolute no-no, and that is forging signatures. I'm going to read this. Under no circumstance should a customer's signature be forged on any purchase document, funding document, or any other document relating to the acquisition of an automobile. Anyone who does this is committing a felony. Let me read that last sentence. Anyone who does this is committing a felony. Forging signatures is against the law. Have I seen this happen before? Do we have lawsuits in this litigious environment that we are in the automobile business? Absolutely. And do people forge signatures? And there is never a situation where it should be okay in our minds to forge a signature in this environment, probably in any environment. But let me give you a couple of vague, let me give you a couple of scenarios. Customer signs their documentation. They bought some products. The deal gets to the bank for funding, and the bank says, hey, you charged too much for the service contract. You need to reduce the service contract from $29.95 to $24.95. So we have to cut the cost of the service contract, or the selling price of the service contract, $500. When we do that, the customer's payment is going down. Under no circumstance, even if the customer's payment is going down and the cost that you're selling the service contract is going down, and you talk with that customer and you mention to them, hey, I can just get this signed for you and get a copy to you, that is illegal. Even when it's benefiting the customer, it is never legal to forge a signature. So I want to reiterate that to everyone. Anyone who does this is committing a felony. Next, I'd like to go to overstating income. This is a big one. This has been going on. This practice has happened in dealerships on a number of occasions. Let me give you an example. We get an individual who makes $2,500 a month, and they have perfect credit. They have an 800 Beacon score, but they're trying to buy a vehicle, and their income to debt ratio and their income does not really work for the payment that we're trying to get approved. Let's just say we're trying to get a $700 payment approved, and again, the income to debt ratio percentages don't work. It is not legal for you to overstate the income on that credit application and get that deal approved, thinking that the customer's credit is worthy enough for that lender to approve that. So let me tell you what you've created here. You have not only overstated the income, but if you go ahead with that deal and you get that customer to sign that retail installment contract with that overstated income, you have now misrepresented that contract. That is illegal. We cannot do that. So we do not want to ever overstate customers' income. It is what it is. We have to be honest, and we have to do things morally, legally, and ethically when we're doing our day-to-day operations within the F&I department. So overstating income is not a good thing to do. Any follow-up on that, Bob?
I would just say we've touched on this before in previous sessions, and we have calls on it a lot. We talk about victims of credit application fraud, and it's the 5 key credit determinants. If we falsify any one of the 5, and certainly one of them is customer's income, the finance source has to report you. The other 4 are housing expense, and then number 3 is time on job. Number 4 is time at the address or residence. And number 5 is if you falsify the customer's job type and make them a manager or a supervisor or a different type of job altogether. But the point is that's bank fraud. That most of the banks are the regulating agency, part of the Department of Justice. So they have to report you. They have to submit a suspicious activity report that goes to the regulating agency, and it lists your dealership as potentially committing bank fraud. So probably we don't want to do that. Jail time is up to 30 years and fines are up to $1 million per count. That would be a violation as it relates to falsifying any one of these 5 things. And we've seen a lot of this going on in the news even now. So just don't do it. Don't do it. Go ahead, Reggie.
That's right. And I'm going to kind of move a little bit quicker here because I'm noticing a few things, and I'd like to make sure we kind of get down to a couple of other areas because I'm kind of going to bounce back to this. But the next is non-compliant menu sales. I'm going to touch on that in our next piece, successful menu selling. But non-compliant menu sales, I'm going to read this. Menus can be misused to hide the loaded payment or alter after the fact to document acceptance of products the customer did not agree to buy. It is very easy to manipulate what a menu looks like. On a menu, we need to show the base payment. We need to show the APR that we're charging the customer. We need to disclose all the products, and we need to have the payment at the bottom that shows the additional products right there. It is very easy to manipulate what those payment numbers look like. One, we can have the payment manipulated at the top where the base payment is actually packed, which we'll talk about on number 5. We can overinflate the markups with regards to the products to show different numbers to make our customers land in a particular area, knowing that this is not compliant when we're presenting it. We've seen situations like this where customers are misled because the menu is not forthwith and it is not truly representing exactly what is happening with regards to the retail installment contract. So compliant menu sales are very, very, very important. You know, a best practice with regards to menu sales, as I stated earlier, is to make sure that we disclose 1, the base payment before any products. simply on the sale price of the vehicle, trades involved, and down payment. You should disclose the actual APR that the customer is being charged. It should be there for them to see. And you should disclose all products. And I say this again, another best practice is if you're selling X number of products to one customer, the next customer should get those same X number of products if that vehicle qualifies for those products. We do not want to pick and choose which customer gets which products. We want to stay compliant and we want to stay consistent with regards to our menu sales. Moving on to packing payments. This is another area that sales managers and business managers are like. We have to be very careful in packing payments. It's very easy when we are negotiating a deal with a customer to mislead them to include products along with the vehicle purchase itself. So an example, we agree upon a selling price and now we're negotiating what our APR and what our payment looks like on that particular vehicle. Let's just say that that number ends up at $393, okay? And there are no products involved. Yet, when we go out and we present that to the customer, we let them know that that's in the $430 range or it's in the $450 range. And we give some different scenarios that they can look at with different amounts of money down, where we can actually pack the payment piece in there, or the payment piece can be packed in there. That is illegal to pack payments. That is not full disclosure to a customer. And that is an illegal piece where we cannot do that. So packing payments and non-compliant menu sales kind of pull in together right here, where we are not being honest with the customer. We're presenting something to them so we can get something more out of the situation, which is money or gross that goes to that respective deal. So packing payments, and I want to read this here. The payment quotes during the purchase process must be limited to the agreed to cash price or trade difference of the vehicle, and any disclosed and agreed to equipment, product, and service, and applicable taxes and fees at the representative APR and term. So packing payments is a no-no. Bob, any ads there?
Every time we talk about that, in fact, I just had a call about that last week, I guess it was, and it's amazing how many times I get someone that's questioning, or I wouldn't say that they want to argue, whatever, but they want to make the point that they don't believe or want to be shown where the dealer is a creditor. And it's amazing, a lot of dealers still don't think they are a creditor. And also, many times people want to think that packing payments is not illegal. So number one, the dealer is a creditor. And number two, packing payments is illegal. And quite frankly, packing payments has been illegal since 1999. And in 1999, it's called the NAG. I love that acronym, NAAG. That's the National Association of Attorneys General. In 1999, they defined and denounced payment packing with a resolution. The definition is, packing is the deceptive practice of misrepresenting monthly payments to consumers during auto sales and lease negotiations in order to facilitate the sale of automobile-related products and services. Payment packing, product packing, tie-in sales, they're going to come back to bite you under the UDAP, UDAP, and also UDAAP, UDAAP statutes. Every state and the Federal Trade Commission will have the UDAP statutes, which stands for Unfair and Deceptive Acts and Practices. And now with the CFPB, they've bought a vowel, they've added another A, and that A stands for abusive. So UDAAP stands for Unfair, Deceptive, or Abusive acts or practices, abusive meaning misuse, use wrongly, or mistreat people. Bottom line, the maximum penalty from a government standpoint relating to payment packing as part of UDAP has gone up for 2020, and that maximum penalty now is $43,280, and that's per violation. So bottom line, packing payments are illegal, and the dealership is a creditor. Anyone who wants to look that up, go to pages 9, 10, and 11 of car law with respect to the facts of a dealer being a creditor. Go ahead, Reggie.
All right, so let's move on to non-compliant disclosure. And simply put, any documents that we get customers to sign, we need to give them ample time to review the contents of the document. Specifically, the retail installment and or consumer lease agreements. We have to give them time to read this, and that's not just us kind of going over it. We need to make sure that they are fully knowledgeable and understand what they are signing. So let me give you a couple of quick things here. One, give customers a copy of the unsigned credit contract with TILA disclosures, Truth in Lending Act disclosures, and ensure they have a meaningful opportunity to review the document before signing it. Simply meaning it's not sufficient in today's world to simply just show them a copy of the document and say, hey, your payment's $400, and we tell them what their APR and we get them to sign. They must have an opportunity to truly review the document in its entirety. Number two, allow consumers to keep the document if they do not sign it at the time. That customer has every right to have a copy of that retail installment contract or consumer lease agreement, even if they do not sign it at the time. They can take it with them. They can review it. They can get a third party person to help them review it or to understand it. That is their right per Truth in Lending to be able to do that. So we want to make sure that we are not rushing a customer. We want to make sure that we are disclosing the contract appropriately with each customer that comes into the business office. We don't want them to walk out of there feeling as if they did not fully understand it. We don't want them to leave with any questions. So when a customer is reviewing the agreement and going over it, we're giving them that opportunity to do that. There should be a couple of questions that we ask them if they're looking over it. And that's simply, hey, is there anything specific that you would like for me to go over with you? There are a number of things in a retail installment contract that a customer might have questions about. And of course, the most obvious is, do you have any questions with regards to your contract information? Anything else there, Bob?
No, sir. Ladies and gentlemen, I hold in my hand a West Virginia Reynolds law contract dated July 19. I think that's still current. Picked this up when I was in the store in West Virginia during that time. However, down at the bottom of the page, just below the annual percentage rate information, it says, you agree to the terms of this contract. And this is what Reggie was talking about. You confirm that before you signed this contract, and here's the key phrase, we gave it to you. We gave it to you, and you were free to take it and review it. You confirm that you received a completely filled in copy when you signed the contract. Now, the slang term that I've called that for decades is give before show. You got to give it to them before you show it to them. And for decades, Reggie, as you know, we trained on that, where you would lay the contract in front of the customer, maybe go line by line by line, and talked about the disclosures as we went through that, and then basically sign here or handle the objections. That's been illegal for years. But you have to give the customer the contract first. And by the way, back to car law as the model, the F&I Legal Desk Book, you'll find what we just talked about and said on page 24 of car law as well. Give before show. So not trying to clone anybody, but the way I say it is, Reggie, here's your completed retail installment sale contract in its entirety for your review. Reggie, take your time with it. No rush. Keep it as long as you like. You might begin by checking the information up here at the top left-hand corner. Let's make sure, first of all, that your name, address, county, zip code, and phone number are correct. And Reggie, I'll certainly be happy to answer or address any questions or other concerns you might have as well. Then after a few second pause, I'm going to ask one of those two questions that's part of the 7 deadly sins. Reggie, what part of this contract, if any, would you like me to go over with you? Reggie, it's yours.
Absolutely. And lastly, we want to just kind of talk about excessive buy rate and aftermarket products. Don't take advantage of your customers and mark up things more than they need to be. So, you know, one of our other things in here in compliance and ethics is F&I best practices. You know, I have seen business managers overcharge customers for products. I can provide you an example of someone, this was probably 10, 12 years ago, in a store that I was working with, and I happened to be doing a deal audit. And I noticed that on an ancillary product that had a rough cost of about $250. Okay, that was actually the cost, roughly around $250, excuse me. And the F&I manager was charging $19.95 for the product. So that led me to see some other things with regards to payment packing, non-compliant menu sales, and I was able to gather that simply from the product markup. There was no reason for that product to be marked up in that region. A fair markup for that product was probably, $300, $400, $500 on that particular ancillary product. But again, it was one of those scenarios where the business manager took advantage of the situation with that respective customer. I have seen dealerships author policies where they put markup caps, 100% of cost, or X dollars over cost, X percentage over cost. So we can stay within some guidelines so we can maintain consistency with our product markups. And if we ever find ourselves in a particular situation where our deals are being reviewed from a legal standpoint, a lawsuit or something like that, if we're doing things the right way, if we have best practices in place, then they will find nothing but consistency with regards to how we are conducting our business with customers day to day. So I would advise everyone to make sure that you have those policies in your stores with regards to markups and excessive buy rates, where we're staying within a consistent region with regards to marking up buy rates to sell rates, and with regards to after product markup. And so that leads me to, I want to just move to selling with integrity, and I won't stay very long here, and F&I best practices. I'm just going to tell you that if dealerships were to institute, and many of them do across the country, best practices with regards to how they do certain things, as I just spoke about with the product markup, and paying attention to these 7 deadly sins of F&I, also understanding the law, this is really going to keep anyone and everyone in line with regards to selling with integrity. Integrity is a character trait, okay? It's not something that you turn off or turn on. It's something that you have. Do you have integrity? Are you okay packing a payment with a customer just so you can go back to the sales desk and tell them that you made a $3,500 back end? Are you okay with forging a signature? Are you okay that you overstated income on that customer with the bank? You have to, at the end of the day, you need to feel comfortable that how you're operating that business office, that it's being operated with integrity. If you operate with integrity, you will keep your dealership out of legal trouble, okay? So these 7 deadly sins of F&I, again, I started out talking about the new business manager and the veteran business manager alike. New business managers just starting out, stay away from this stuff. Sell with integrity, follow best practices that are in your dealership. And for you veterans, make sure that you're staying away from these things. I'm gonna just assume that none of you guys are doing any of these things, and that you have good practices in your stores, and that you're selling with integrity. And if you follow these things that you need to stay away from with these 7 deadly sins of F&I, and if you understand and know the law with regards to how we need to conduct business in the F&I office, you will be selling and doing things with integrity, and you will have best practices. So that's all I have for compliance and ethics, unless Bob wants to have a follow-up on that.
Yeah, that's great. We want to get into sales and management, but I just want to say, and following up what you said with compliance and ethics, and now also sales and management, the great news is NADA's Paul Mitri has written the programs that really help us with that. I've heard over the years numerous times from dealers and dealership managers and even people on the financial side of the industry that they would say, look, if the regulators would just leave us alone, any of the attorneys general, the FTC, the CFPB, the whatever, if they would just leave us alone, we would kind of police ourselves and take care of it. Well, now with what NADA has done, specifically with Paul Mitri, the VP for Regulatory Affairs and Chief Counsel for Financial Services, with the NADA Fair Credit Compliance Policy and Program and the NADA Model Leadership Policy for Voluntary Protection Products, they've done that. So all we have to do is implement those two programs. And on the rate side, that's the Dealer Participation Certification Form, where you set a standard dealer participation rate for every customer. Maybe that's 2 points. If the buy rate is 5, the customer rate's 7. If the buy rate is 6, the customer rate is 8. I will never go above 7 or 8, but there's 7 allowable reasons already approved by the Department of Justice that allows you to drop that rate to be competitive. And then when it comes to product, the NADA Model Leadership Policy for Voluntary Protection Products, what that program is, you set a standard retail price for every product that you sell, both individually and also bundle pricing as well. And those are recorded, a standard retail price. And what that means is you will never go above that standard retail price, but there's 5 allowable reasons, allowable discounts that allow you to do that to obtain and reach you and get the business. So NADA has really done that for us. And now, as I mentioned a few minutes ago, with what the American Bar Association has done, Reggie, to me, this should be a no-brainer. Because if I do that as a dealer, dealership group, management team, whatever, and I implement those programs, and faithfully implement those programs, I now have safe harbor protection against pricing discrimination claims. To me, that would be a no-brainer. Protection for the dealership, the dealer, the customer, and the finance sources as well. Go ahead, Reggie.
All right, so moving on to sales. I want to talk about something that is near and dear to my heart, and that is successful menu selling. I was just at one of my stores up north and doing some performance review meetings, and we have followed a kind of a training regimen that we feel like leads to good success with menu selling. So I want to kind of talk about a couple of things, and then we're going to get into menu selling. But I want to start with what we like to call early management involvement. You know, business managers, we want to encourage you to be visible at all times. If you're not taking care of a customer in the business office, if you're not on the phone with the bank trying to rehash a deal or get a deal approved, if you're not getting deals booked and getting them into the accounting office so we can get deals funded and cleaning up the CIT, you need to be visible on the sales floor. You need to be visible at the sales desk, helping with TOs, helping with deal structure. You should know what's going on. You should be touching customers. We feel that this is a vital key to F&I success and successful menu selling. So the next piece, when a customer agrees to buy the vehicle and the sales associate is getting paperwork put together, and that deal finally comes to you, the first part of this deal is I like to call the pre-interview. You know, I have always taught and encouraged F&I managers when they first get a deal to, you know, as you're going through the paperwork, making sure that the sales associate has all the required documents, gotten all the things signed, they've got everything in there that they need, so we can go ahead and get them into the business office and get their paperwork completed. I like to encourage business managers to spend some time with that sales associate. They have just spent the last hour and a half or 2 hours with them. They've been talking to them over the phone for the past 3 or 4 days. That is where the customer is most comfortable. So naturally, that sales associate is going to know more about this customer for a number of reasons. So I would encourage all business managers to take time to kind of find out what's going on with the deal. What, you know, who is the customer? Are they married? Do they have kids? Are they all here? You know, little things that you can find to help you get yourself prepared for the next part, and that is your customer interview, which should take place out at the sales associate's desk, again, where the customer is most comfortable. In an interview, we want to come out and we want to establish rapport. I mean, let me start back. We want to introduce ourselves, tell them who we are, what we're doing, why we're out here. At that time, we want to establish rapport. We want to make a friend. We want to ask qualifying questions in the interview, getting that information so we can place that information and build our menu and take the information that the customer has provided to us so we can review the menu information, the product information with the information that the customer provided. Let me give you an example. You know, one of your qualifying questions should be, how long do you plan on keeping the automobile? And how many miles per year do you normally drive? Do you plan on getting your maintenance done here at the dealership? Will you be following the maintenance guidelines? How often do you normally get your maintenance done? You know, what's your insurance deductible on your automobile? Do you have an extended service contract on your trade-in? These are all qualifying questions to help you put together a very solid, well-built menu presentation. So if a customer says that we plan on keeping the vehicle 4 to 5 years and we drive 20,000 miles per year, it would probably make sense to offer the customer a 5-year service contract that will run 100,000 miles. So when you move over to your menu and you're talking to the customer, Mr. and Mrs. Customer, by choosing the Platinum option, you're going to receive an extended service contract. You told me that you were going to keep your vehicle for 5 years and that you drive about 20,000 miles per year. So Mr. and Mrs. Customer, I kept your driving habits in mind when I put this menu presentation together. So for you, we have a 5-year, 100,000 mile service contract. It's going to take care of all of your mechanical failures and breakdowns, except for normal wear and tear. This is an exclusionary contract, meaning instead of telling you what it covers, we're going to tell you what it doesn't cover, and I'm going to take some time to kind of go over that contract information with you. In addition, it also gives you towing, rental, and travel reimbursement. So if you heard, I took the information from the interview and I put that information into the menu. And we do the same thing with the rest of the products. We disclose to the customer what the payment option is at the bottom. We encourage you to give at least 2 options. Give 2 options. Don't do just one option. Give a 60-month and a 63-month option. Give a 60-month option and a 72-month option. Give a 72-month option and a 75-month option. So a customer has choices. You know, a menu is just like driving up to a fast food restaurant where a customer has a choice as to what they would like to select. So once we get all the way through the menu and we let the customer know, give them the opportunity to make a choice which package or which option that they would like to have, we just let them choose. And if we've done the right things, if we've done EMI, if we have been visible at the sales desk, been visible on the sales floor, if we've done our pre-interviews, if we've touched customers, if we've done a good interview with the customer, let me tell you, at the end of a really good interview, you have made a friend in a very short time period. And here's another piece that I always like to share with people at dealerships. I like to think of a deal in 2 parts. A customer spent 2 hours with the sales associate. Maybe they've driven a couple of different vehicles. They've come inside, they've done appraisals, they've done negotiations for 30 minutes, and they finally decided that they want to buy this $50,000 F-150, and they've said yes. Well, now I'm wiping off the sweat because I've got that part done. But I also have now become apprehensive because now I got to go see the guy in F&I and sign my paperwork. So 2 parts are happening, okay? There's the sale on the car, and then there's the part where they go to the F&I. But at that point, with regards to F&I, everything becomes shortened. Everyone needs to be in a hurry. We're trying to hurry up and get that person into the business office. We're trying to hurry up and get them signed and trying to hurry up and get them out of here. And we got to focus on what we need to do. And if we do these things, EMI, visible at the sales desk, visible on the sales floor, touching customers, helping to structure deals, pre-interviews, a good, strong customer interview, because at the end of the customer interview, you should have made a friend. And when they get into the business office and you are going through that information, we want to hope that our first part, when we've gone through all the products, that they just choose something. Guess what? They may not. They may decline products. But guess what? There's a way to get through that too. And I like to call this kind of an advanced piece of F&I right here. You know, if a customer says no, I know a lot of us have a tendency just to say, okay, not a problem. We put the menu away and we just get the customer to sign up. But I would encourage you not to do that. Let's not take that no. Let's try to bring the customer back into the fold in a non-confrontational way, okay? And I'm gonna give you a quick recipe on how you can do that. Let's not just throw something up against the wall and ask them, you know, why didn't you like the service contract? Or do you think you might want to have this gap at, you know, $9 or $10 per month? Let's not just throw things up against the wall and hope a customer is going to say yes. We want to have a precision approach with the customer. And this is how we do this. Customer has said no. Just let a couple of minutes pass by, maybe get a couple of forms signed, and then kind of bring it back up. You know, Mr. and Mrs. Customer, many of the customers that I deliver find value in at least one or two of the products here in the Platinum option. If costs weren't an issue, you know, which one or two products might you see value in, okay? Another way that you can do this is many of our customers find value in the products that we have offered today. Let me ask you a question. Is it the way that it's packaged, or is it the cost that concerns you? When you ask a customer that question, that's closed, they can only answer one way. Is it the way that it's packaged, or is it the way that it's closed? I mean, or is it the cost that concerns you? If a customer says it's the way that it was packaged, I thought I had to get, you know, all of these products in order to get these two, then you can address that, break out those two products, and tell them what that payment is, and probably go ahead and close it right there. But if a customer says it's the cost that concerns me, well, then we want to move over and we want to let them know, hey, listen, I understand how you feel. It's hard to justify the cost if you can't see the value. You know, do you mind if I ask you a few questions? You know, acquire, acknowledge and acquire. And then we move into trying to figure out where we can go from there. Now that we know that it's a cost, now we can move to, hey, if costs weren't an issue, which one or two of these products do you see the most value in? Well, the customer selects a couple of the products. Well, now we can show the customer what the payment looks like there, okay? And at the same time, take the information that you got back from the interview again. You know, you told me you were going to keep this vehicle 5 years and that you drive 20,000 miles per year. Again, Mr. and Mrs. Customer, this is a 5-year, 100,000 mile service contract, you know? So when you get to a point when a customer has declined products, you want to, again, work with precision. We want to figure out what their issue is. Is it the way that it's packaged, or is it the cost that concerns you? 9 times out of 10, it's going to be cost. But once you figure that out, then we want to figure out which products do they have the most interest in? Do they see the most value in? Okay. If you still get a no at that point, then you want to move into an actual close. Okay. And there are a multitude of closes out there: NASCAR, third option, quick solution. You know, there are a number of closes out there, and, you know, just, you want to make sure that you understand closes, you know, how to use them and when to use those. So those are kind of the tips that I have on successful menu selling. Bob, if you'd like to add, sir.
Just a couple of things. We have to move on and get into these other couple of areas. But, you know, I personally believe, and have for a long time, and certainly we do as a company at the American Guardian Group of Companies, that the single most important piece of paper or digital document in a deal file is a properly executed menu. Believe that very strongly. Why? Very basic. It confirms the dealership was transparent during the sale of F&I products. So if you don't want to be transparent during the sale of F&I products, then I would say to you, probably don't worry about a properly executed menu. But if you want it to be properly executed, single most important piece of paper, you want it to confirm that the dealership was transparent during the sale of F&I products. Now, those of you that will move toward the NADA program based upon what the Safe Harbor protection offers you from ABA and hopefully the states and Congress down the road, you get that 18-page booklet. Go to page 16, and what that has is from NADA Legal, written by Paul Mitri, product presentation and sale. And you have 8 steps. The dealership will present VPPs, that's voluntary protection products, to customers in a standard, simple menu format that at a minimum promptly discloses that there's 8 things we don't have time to go through. However, I would emphasize the word simple. Standard, simple menu format. Pull up the word simple. Simple means uncomplicated, easy to understand, having only one or a few parts. Standard means typical or ordinary. So are your menus simple and standard is the first thing that I would ask you to consider. But again, all of this information is part of the NADA model leadership policy for voluntary protection products. It's what we would have to consider if we want the protection of a safe harbor. Reggie, go ahead, sir.
All right, you okay with us moving on to management real quick?
Yeah, let's do it. Let's just take a few minutes more.
Perfect. Okay, so in the management area, I'd like to talk about the front line of our dealerships, and that is our sales associate or salespeople. Okay, let me start by saying that I believe sometimes we don't value our salespeople as much as we should. These guys and young ladies are working hard out here, spending time with customers. They're on the phone. They're trying to cultivate deals, cultivate relationships, working with BDCs, trying to get customers into the dealership. And when we get them in here, we're trying to get them sold. So hats off to all of our hundreds of thousands of sales associates across the country, because without them, we don't sell a car. And if we don't sell a car, we don't finance a car. And if we don't finance a car and sell a car, we don't sell parts and we don't have service. So, you know, hats off to our sales associates. And I want to talk about training salespeople. You know, let's start by treating our sales associates with respect. We're all selling in our dealerships. We are a production oriented environment. Every single one of our personnel in the store, we are production oriented. We have compensation plans that are production oriented compensation plans, just as your salespeople are. So let's treat our salespeople with respect, and let's train them to be the best, most professional sales associates that they can be. So let's start by making sure that we are consistently training our salespeople. Guess what? 25 years ago, and Bob can probably tell you that, 40 years ago, that salespeople, guess what? They leave things off credit apps. They forget to get documentation signed. They forget to get trade information. There are a multitude of things. Insurance is a big issue. So we need to consistently train our salespeople in training blocks. Maybe we talk about the importance of the credit app, and this is talking about conducting sales meetings. You have to build sales meetings. The importance of paperwork, credit application. Maybe we talk a little bit about F&I. Guess what? They are only going to do what they understand to do. And if they don't understand what you do, then maybe you might have some friction. So we want to train salespeople in blocks. We want to, again, make sure we hit the areas that they need to have, with regards to training salespeople, 8 steps to the sale, 10 steps to the sales, 12 steps to the sale. Dealerships have different ways, but guess what? Every single step to the sale piece that I'm aware of, the first step is meet and greet. So we want to just make sure that we are training our salespeople the right way to get from point A to point B to point C in a systematic, consistent, efficient way. And we want to constantly train our sales force how to do these things, okay? Listen, doesn't matter if you're new or a veteran. Veterans will cut corners just as quickly as a new sales associate who just doesn't know what to do. And that might be worse. And it's our responsibility as managers in the dealership, F&I and sales managers alike, it's our responsibility to hold them accountable. So the accountability is twofold. We have to make sure that, one, our salespeople are trained appropriately, our new ones, that they know what to do, when to do, and how to do. And our veteran salespeople, we just want to make sure that we are holding them accountable to what to do, when to do, and how to do. So training salespeople, we want to make sure that that's a consistent thing. I would encourage you to get on a training schedule where all of your managers, F&I and sales managers alike, are training on a consistent basis, whether it be weekly, bi-weekly. You want to find what works best for you in your stores. And again, conducting sales meetings, they need to kind of be in blocks. Again, are we training on paperwork today? Are we training on the steps to the sale today? Are we training on the walk around today? There are different segments that we want to train on. And again, we want to be consistent with regards to training our salespeople in our dealership settings. Bob?
Yes, sir. We got to get to admin and financial, just a couple of things, but staying with management, I would just say to you on that training of salespeople, and we have the people that are in the store, and we're still doing in many of the stores, probably most of them, the turnover or referral on the left-hand side of that management section. We want to call that the F&I quality endorsement and the transfer of trust, as opposed to just a TO, which sounds, I think, turnover maybe kind of negative. We want to promote that transfer of trust that the salesperson has in the customer already, and ask them to transfer that trust to me or you, Reggie, as the financial services manager. So that referral, that transfer of trust, what we find works very, very well is to share with the customer three things. Reggie, as our financial services manager, we'll share three things with you. Number one, he will expedite that delivery process for you and your family. Secondly, he will assist you with your financial arrangements. And number three, by the way, I almost forgot, be sure and ask Reggie to chat with you about the remaining portion of the manufacturer's limited warranty on your new Camry and how it ties in or relates to your driving habits. So folks, he'll take very good care of you. I'll get back with you in about 35 or 40 minutes, getting that Camry ready for delivery, and see it just a few minutes down the road. So that new vehicle to him is maybe a 2-year-old Camry with 28,000 miles on it, but it's new to that customer. So we want to have Reggie set up to talk to the customer about the remaining portion of that manufacturer's limited warranty. Reggie, just a quick comment or two with respect to admin and perhaps financial. Go ahead, sir.
Yeah, I'll be real brief here. So, best practices, guys and young ladies, checklists. Have a good checklist that encompasses everything that a sales associate needs to do. Sales managers, hold your sales associates accountable to making sure that the checklists are done. F&I managers, make sure that you're holding sales associates to making sure that the checklists are done. F&I managers, hold yourselves accountable on your checklists in your stores. Follow your checklists. Sales managers, make sure that you're holding F&I accountable to checklists. Everyone needs to do checklists, and everyone needs to be held accountable to do the checklist. If we do those things, then contracts in transit will be a lot less frightening. I've seen contracts in transit really frightening in dealerships, but if we follow checklists, we do things the right way, we're doing things legally, ethically, and morally, contracts in transit will work out great, meaning that we will have good cash flow in our stores. And I'll quickly just touch on financial here. Deal structure is another important efficiency piece in my mind in the dealership. And that is making sure that we're structuring deals appropriately and properly, that we're making sure that we are in line with regards to bank guidelines. F&I managers, sales managers, know your bank guidelines, know where your deal structures need to be, where they need to be. That will increase your approval ratings, making sure that you are doing credit applications appropriately, making sure that you're filling those out appropriately, making sure that you're not overstating things, that you're being honest about certain things. Those all go into a part to making sure that we can get deals approved quickly and efficiently with regards to us selling cars in the dealership. So I just wanted to touch on that real quick. I know our time's running out on the financial there.
Very good, Reggie. In our May webinar, those of you that have joined us for all of them, that webinar we did with Executive Director Dave Robertson and President of AFIP, and what we were talking about was the FTC cooling off rule, in-home sales, and product protocol for executing, among other things, a retail installment sale contract remotely. Just had a conversation with one of my attorney contacts yesterday about this, And in preparation for that webinar in May, we went directly to Hudson Cook. Dave Robertson did this and came up with X number of bullet points with respect to executing a retail installment sales agreement remotely. And just let me read 4 of these to you and give you a couple of recommendations. And that is, the dealer scans the retail installment sales agreement and sends it electronically to the customer. The customer prints a copy of the contract and signs it. The customer must send the wet ink signed copy of the retail installment sale agreement back to the dealer as a hard copy. Here we go. The copy of the retail installment sale agreement sent to the finance source accepting assignment must contain a wet ink signature. And then what we talked about in May after that was this caveat that says, and this is again Hudson Cook talking, however, some finance sources may accept a copy of the signed RISA, meaning no wet ink signature or a limited number of them. So here's the Hudson Cook and our recommendation if they're doing that. A manager with the authority to do so in your dealership should contact the finance sources available to the dealership to determine their acceptance policies for sales contracts that do not contain a wet ink signature. And if they say, hey, we're not requiring it, then the Hudson Cook recommendation, also recommendation from AFIP, an American Guardian group of companies, is very basically this. If acceptance is permitted, a copy of that policy should be provided to the dealer in writing. So that protects you as it kind of comes back as well. Well, Reggie, we've gone a full hour. I want to yield this back to John Friedland to close it out for us. Again, our commitment, as always, is to help you folks maximize deal profit, doing it the right way in a manner consistent with good customer relations and sound business practices. Let's have just a dynamite last quarter of this year and see if we can maybe take this thing up to close to 15 million new cars and light trucks. Mr. Friedland, John?
Yeah, thank you, Bob. Thank you, Reggie. I'd like to just draw your attention to our future webinars. We're going to have one on November 11th. That's Wednesday as well, 1 o'clock Central Time, as well as December 9th, 1 o'clock Central Time. Please go ahead and reach out via LinkedIn. You can click AGWS, or American Guardian Warranty Services, and follow us. We do put out information there periodically. And again, just to remind you that this whole webinar series is available to you via our website, agws.com/webinars. So thank you very much, Reggie, again, and thank you, Bob. Take care, everyone, and have a great day.